Just walk me through your latest estimate on exactly what the price is going to look like at the end of Q4 and how much more steam does this gold rally actually have?
If we look at the foundations of this rally, yes, it started with a lot of central bank buying, record buying over the past couple of years. But this year, that buying momentum tilted towards the ETF buyers. And that has accelerated at a pace that we haven't seen since 2020. In fact, we're now just 20 tons shy of the all-time high that was reached in October 2020 in tonnage terms, yet we've already hit record highs in dollar terms. But what's been interesting since the rally at the start of September is that the momentum has been incredibly fast. So we've seen the universe of investors expanding quite rapidly into the gold space. But because that momentum has been very, very quick, we've also seen that the India buying has accelerated at a pace that we do expect to see during a seasonally strong period for consumption. But normally higher prices tend to dampen that sentiment, and that hasn't happened. So on the one hand, we still have strong investment demand. On the other hand, we still have a good, solid physical floor in terms of India's appetite. But our concerns arise, what happens when India's demand slows down? We're moving past the Diwali-related buying at the end of this week. We will then have wedding-related buying that will help to keep some of that momentum, keep that momentum risen. But we think that prices are ripe for a correction in the near term. We are expecting record highs going into 2026, but prices have been trading at overbought territory since the start of September. So for a healthier upward momentum, a short-term correction would actually benefit the longer-term trend.
Suki, how deep do you think that correction is going to be?
We're forecasting prices to average $4,000 per ounce in the fourth quarter. So we do think that we could see a dip below that 4,000 mark. In the near term, we have technical levels that we're watching, and prices are quite, we're still seeing that quite a strong momentum on the upside. But in the near term, we will be looking at levels around 4,200 and then the 4,000 mark. So we do think that if we see a dip in prices, it could be a sharper correction.
I've spoken with other analysts this week who are much more bullish. They say gold is on track to test 5,000 US dollars an ounce at some point next year. Do you think that's a realistic price target?
We're forecasting prices to average 4,488 over the year as a whole, but in the fourth quarter of next year, we forecast prices to average 4,750. So given the volatility that we see in the market, given the trading range, we do think that $5,000 per ounce could be a target that prices hit as well. But I think on the broader momentum, we need to see if the ETP buying continues at the pace that we've seen over the recent weeks. And it has really accelerated at a pace that we haven't seen since 2020 over the past few weeks, and that momentum would need to be sustained.
Suki, let's talk about some of the other narratives around gold right now. And you mentioned the Diwali effect. That is, of course, also feeding into the price momentum. But at the same time, the US government shutdown continues. Historically, this political gridlock has impacted gold prices. But do you think the full extent of the US shutdown is being adequately priced in?
When we look at how gold has responded to previous shutdowns, we don't always see a consistent response. It depends on the market sentiment, and it depends on which point of the hiking cycle or cutting cycle we had entered into. If we look at the 2018-2019 shutdown, which is the longest period we have to analyse, gold prices over that period only rose by a couple of percent. So we didn't see a significant firming in the price action. But also the sentiment at that point wasn't as bullish in the gold space as it is now. We've had a number of structural factors that have really supported this rally, and a number of those remain intact, whether it's concerns around fiat currency debasement or whether it's concerns around Fed independence. The shutdown itself has not been a trigger that has seen gold prices rally, but it has added to that underlying concern, risk, and uncertainty in the markets. So coupled with the ongoing concerns around geopolitical risk, we've seen that investors have continued to want to add to their safe haven allocation and looking to increase potentially that target allocation as well.